Today's conversation is sponsored by First Generation Capital Partners.
For someone who's new, I think nothing substitutes, meeting someone who's a few years ahead of you that was in your spot a few years ago and has taken those steps. And so it's real. It's not just the fluff of an infomercial or an internet guru at this point.
You're listening to the Going Long podcast with Billy Keels, the #1 podcast for long-distance real asset investing.
Welcome to the Going Long podcast. We're back once again to continue to help to educate you so you feel much more comfortable as well as confident investing beyond your backyard. I am your host, Billy Keels, and I am super excited to welcome you back to another amazing conversation that has lots for you to be able to not only listen to, but to be able to take away and put into action right away. I do this all the time. I want to say thank you for continuing to be here, continuing to invest your time with me, with the guests. And I just want to say thank you for that. Appreciate it. And also for those of you who are leaving honest written reviews, which is fantastic, helping the podcast to continue to stay in the top 1.5% of podcasts. We want to continue to move up into the 1%. So if you got a couple friends that listen and want to leave an honest written review, that would be great as well. And thanks for tagging us, especially on Instagram and on LinkedIn. Makes a big help and brings more and family members to the podcast, which is great. Also, too, if you want to listen to any of the previous podcasts, just go to firstgencp.com/podcast and you can hear every single one that we've ever done. So not a lot of times do we talk about the importance of debt. But today we have a guest who spent a lot of time on Wall Street, really spent time understanding more about debt on types of notes, performing, non-performing, also leveraging that today to help others be able to move forward, be able to understand and evaluate their investment opportunities. And so I know that you're going to get so much out of the conversation that we have with Jack Krupey. So we're going to get to that just after this. If you want to understand how combining real estate and distressed debt can be the key to unlocking your long distance investing success, then guess what? Today's the conversation you're going to want to listen to until the very last word or palabra. You know what? And the reason for that is because today's guest not only started his career as a real estate broker in the commercial as well as residential sales. That sounds pretty cool to me. Sales, we like sales. Also as an associate broker in the financial services industry. Definitely want to hear more about that. And check this out. Even in the early 2010s, he founded his own company and focused on residential non-performing as well as performing notes. That sounds super interesting. It gives me great pleasure to welcome to today's conversation the principal of JKM Investments, Mr. Jack Krupey. Jack, welcome to the show, man.
Thanks for having me.
Jack, I am super excited. It's really great to connect with you again. And I'm sure that the Going Long family is going to learn so much from you, be inspired, and also understand some really actionable steps they can take to move forward and progress in their own personal journey. So really glad you're joining us. And hey, listen, Jack, I'm going to ask you 5 questions. Well, I'm going to ask you more than 5 questions, but I'm going to ask you at least 5 questions. You're going to get 2 in the beginning. You're going to get 3 in the end. And I really would like to get started with question number 1, because this is just going to make me so happy. Can you share with us where you call home nowadays?
So I am in San Juan, Puerto Rico. I've been here almost 5 years at this point, but originally grew up in New Jersey, lived in New York City for many years before that.
All right, fantastic. I'm sure we're going to find out a little bit more about that. So Puerto Rico, so that's kind of cool to be able to call home. And I also spend a lot of time on the East Coast of the United States when I'm back there. So the other thing is, Jack, I really love positivity, and the Going Long family really love positivity here. So would you be kind enough to share with us what's the most positive thing that has happened to or for you in the last 24 hours?
So I just got a notification this morning. One of our syndication deals that we're invested in just got a loan modification. A lot of fear about bridge loans and resetting interest rate caps. And, it's good to see that positive things are happening and that, lenders are playing ball and, working with good operators, good properties that are just kind of caught by this, in crazy rise in interest rates over the last 2 years.
All right, fantastic. So it's always nice to get some good positive news that way, and I appreciate you sharing it with us because I'm sure that trickles down for your investors. So that's fantastic news. Listen, Jack, here's the thing. I know we're kind of reconnecting here, but one of the things that the Going Long family knows about me is that I'm a recovering perfectionist. So sometimes I do things that are a little bit outside of what most people would say is realistic, like tell your entire backstory. I think I tried to do that in 2.5 seconds, hitting on some highlights. Obviously, there's a lot more to your story. So I'm going to ask you 2 things. 1, if you could tell your backstory in your own words, You don't have to take a second and a half, take as much time as you want to tell your backstory. At the same time, the second question for you is, if you could also help us out by sharing some of the major decisions that you've made along the way to get to this point in your journey, and then we'll see where you and I take the conversation from there.
Sure. So I originally thought I was going to be in the IT industry. It was late 90s, was really into the internet, ended up graduating in 2001, and that was the dot-com crisis. So I was fortunate to have a job, but it wasn't as exciting as I thought it would be. And I read one of those no money down books on real estate. My college landlord became a mentor of mine, and I bought a bunch of houses, no money down. So 01 to 07, 08, I did all the traditional stuff, fix and flip, wholesaling, realized how difficult it is to scale single family houses and how the maintenance and a lot of the overhead can just eat you up on that space. So 08, I moved to New York, and a bunch of the private equity and hedge funds needed real estate people. So while the market was frozen and the single family market was very difficult, I ended up at a fund buying non-performing loans, learned that business, partnered with left that one firm, partnered with a family office, and eventually partnered with a private equity fund that bought $3 billion worth of loans. That was from my advertising on LinkedIn, because we were buying and selling $1 million, $2 million pools, small deals. But because of that, I got the attention of a private equity fund. So one of the life lessons there was just, you got to get in the game. You got to be active at whatever level it is, and it will build upon itself. After that, it was an amazing run. Was making more money than I ever thought I would in my life. But now, instead of being a real estate professional with all the tax benefits, I was paying a 50% income tax rate in New York. And it wasn't the lifestyle I had sought. I got into real estate to have passive income and freedom and flexibility, not to be at a desk in New York grinding away. So eventually I realized that freedom and lifestyle were more important than money, and started taking the steps to try to get back some of that personal time and freedom. So I moved to Puerto Rico at the end of 2018. There's some amazing tax benefits down here for export services, and was fortunate to eventually get bought out of my prior firm. And I'd been passively investing over the years into multifamily, self-storage, mobile home parks. So once I was down here and was going to invest a lot of my own capital anyway, I decided to monetize my mission. And for the first time, because in New York I couldn't take investor money, I started my own Reg D funds, and now co-invest with close to 100 investors through my series of funds in multifamily, and love it. I spend half my time talking to investors, half my time talking to operators, and it's a great life, and I enjoy everything I do.
Being able to enjoy the things that you do is fantastic. I appreciate you being able to share that with us. And there's a number of different things that I could go to, and we have a lot of people that are listening that are in the IT and in IT sales and leadership roles and stuff like that. I guess because that's the background that I came from. And so, but there's something that you mentioned, and I just want to kind of come back to that. You said along in the journey that you realized that freedom and lifestyle were more important than money, right? Now I come from a family where, we didn't have a lot of money. I watched my parents work 2 jobs most of the time. So I really thought that was the answer to everything. By having more money, you were able to solve all of the problems. And so I'm just curious if maybe you could expand a little bit more on that, because that whole concept of freedom and lifestyle, it can sometimes be pretty ambiguous, right? I mean, because you go out there and you hear people like, what does that mean to you? And how did you realize that for you in your context, Jack, that freedom and lifestyle was much more important than actually the money?
Yeah. So, it's obviously, sometimes it's a moving target, and it's a balance, of course. I mean, it's not like I'm not a guy who would just sit on the beach and do nothing, but, the freedom, there's a certain minimum amount of money you need. Everybody's number is a little different, but once you get close to your number, whether it's on a recurring monthly basis or a certain amount in the bank from, deals or bonuses or, tech stock, if you will. Once you get to that minimum number, it becomes much more about freedom and flexibility. And that number is different for everybody. And it also really depends on where you live, depends on your tax situation. And, for me, it just was, that typical Wall Street grind of, I had a colleague who's almost like a badge of honor that it seemed like was bragging that didn't see his kids during the week, because he was on the train before they woke up. And by the time he got home, And I heard that, and it was said like a badge of honor. But for me, it's like I feel like I'm failing in business if I can't control my lifestyle, regardless of how much money I was making. So it became for me that just the tipping point was I had enough money coming in, but I didn't have my freedom. We had contractual vacation time, but then I would get guilted for taking it, and it was starting to affect my health as well. I was getting TMJ in my jaw. I would yawn, and my jaw would like snap like you're snapping your fingers from the stress that built up. So, and then when you factor in taxes, I think a lot of people lose sight of taxes. If you're in New York or California and you have, you're in that 50% bracket, every dollar you make, over a certain amount, you're losing half of it if it's not structured properly. So, when you start thinking about your time and if you did go full time into something else like real estate, you could flip one house a year sometimes and make $100,000, or spending that hours on investing in multifamily syndications that have tax benefits. Sometimes you can make half the money and keep the same amount of money, and that ended up the calculus I eventually made. Where mine was a unique situation because I owned a piece of the business. But by leaving as an employee, I went from active income to passive income. And so I left a salary, but by investing, the money I was making from being a partner was actually taxed almost at zero because I was able to depreciate against my passive income from owning. So everybody's math is different, but I think a lot of people lose sight of the math and just don't have all the pieces to make a smart decision.
Yeah. And so being able to make a smart decision, because you touched on a point here, I think that's really, really important. And you come from a similar world. So you're so busy and you're so much in the grind that you don't know what you don't know. Now, you've just mentioned a couple of things that that's when you listen to them, they sound simple enough, right? You're talking about your active income, your passive income, and many times people don't really understand that. Now, I don't want you to give us a masterclass on that or anything like that, because we also understand. But what do you suggest for that extremely busy professional that is probably continuing to get, I would say, crushed on a tax perspective? And maybe they're in New York, maybe they're in California. I like the examples you used there. Actually, our friends in California, I think, are actually at 51% if you take in state and federal, which is pretty interesting. But what did you find was the best way to find and build your team that can help you to assess your specific situation?
Yeah, it's a great question, and the first step is just to start with listening to shows like this, other great podcasts that are niche, because there's very few, unless you have $100 million in a family office and can hire a bunch of tax professionals. There's very few firms that just you could plug into that do this full time. That will work with someone who has that $1 to $10 million net worth. So you really have to piece together that team, and it's through mastermind groups, through digesting content. And I've gotten this feedback from a number of investors that said they wish that there was sort of that go-to place for things, but it is unfortunately spread out. There's certain firms that are good with the solo 401k. There's certain firms that are good with the depreciation tax deductions. There's oil and gas. I mean, it's very, it's all over the place, and informally, because we're certainly not any licensed. We're not financial advisors. We're not licensed, but we try to do this informally ourselves for ourselves and our investors and my friends and our network, just to try to pull together the best network we can of people we know, like, and trust, and have that industry specific knowledge, because everyone's situation is a little different.
Yeah, exactly. And I guess that's it's really the understanding the frameworks or the mindset, right? And definitely not giving anybody any type of advice at all. But, to your point is when you start realizing that you have a particular situation and everyone's situation is different, it's how do you leverage what you're already doing? If you're listening to a podcast, if you're watching a video, and then from there, it's really about being able to take action, right? And find out more but take action. Don't just let this be a passive exercise. Recognize what your situation is, and then from there, take the most appropriate steps for yourself, and obviously leverage network where possible. You also said something in the very beginning, and I found it really interesting. I always come back to this, but you said, if I understood you correctly, in 2001, you were in IT, and then you picked up this book and you read the book and you devoured it, and then you started taking action. Well, you were kind of in New York City, the home of, well, a lot of stuff, but most people know it for Wall Street and paper assets and all that kind of stuff. You had business opportunities, and you were working in debt markets. Help us understand, what was it that attracted your attention? Like, you got to the book, right? And you read the book, but what was it about real estate specifically that you were kind of like, all right, this is where I want to start to take action versus, maybe some of the other options that you had as other incremental steps? What was it about real estate that really got your attention to take action?
Yeah. So I'd read Rich Dad, Poor Dad. I think my aunt gave it to me for my high school graduation. So it's probably like 18. I read Rich Dad, Poor Dad. So I at least had some idea of, assets versus liabilities and good debt. And then when I read that book on real estate, actually, I went to Las Vegas with a friend. It was shortly after my 21st birthday. I think it was actually one of those flights like 2 months after September 11th, where it was like the airfare was like $100.
Yeah.
And I went to Vegas. I saw the glitz, the glamour, the money. We're in the tech crisis, and I had a job, but I wasn't really happy. The excitement of, I thought I was going to get into tech and be flying all over the world, doing crazy computer things, making a lot of money. And I was fixing desktops in Rochester, New York, right before I'd moved down to the city. And so I'd had that drive. And you mentioned, I watched my parents struggle. So I knew from a young age, I wanted to make money. I wanted that. I wanted to avoid that stress that I saw. And we never missed a meal, but I just saw them, stressing. And, they were late 70s, 80s, where, kind of a 10-year recession. So, I think I had some of it just built into me naturally. But, when I read the book and some of the it was, I forget the name of it, but it was literally one of those no money down, how to make money. And they just went through the type of personalities that do good at it, those that are, outgoing, willing to be connectors, willing to just dive in. And as I read the book, I was like everything about it. And I didn't have a lot of money. I had a W-2. I think I was making $50,000 in 2001, which at the time in Rochester wasn't bad. Mm-hmm. And it's like, I have monthly money, I have good credit, but I have no capital to start. And, real estate, the creative real estate, whether it's subject to in today's market, low money down, seller finance, that was the path for me. There was really no other way. I didn't have money to start playing the stock market. I didn't have any other assets other than my time and my hustle. So it's just something that spoke to me.
Well, I think that's fantastic, right? When you have these certain aspects that can speak to you that really get you to move. But it sounded like in the beginning, it was someone who cared enough about you to gift you a book, right? And so by being able to have that book and have those concepts, someone that you trusted that said, hey, look, Jack, read this book. And you, once again, you took action to read the book. And then from there, you realized on a trip that, hey, listen, there are certain traits or characteristics that are being described by those that are successful or have deemed themselves or have been seen by others to be successful in this space. And that gave you the impetus to really go out there and start to take action once again and move in that direction. Now, it would be a shame if I did not ask you about debt, right? Because you worked in that. And we talked a lot about that before in terms of notes and performing and non-performing. Now, just if it's like, imagine someone's just listening to us for the first time and we're talking about debt, you're talking about notes. Help us understand, just as it relates to real estate or tangible assets. When you're talking about debt, talk about to us kind of not necessarily what it is, but the importance of debt in terms of being able to improve the opportunities for success, because it's something that you even talked about in the positive things that happen for you in the last 24 hours. But just talk to us about debt and the importance of debt as it relates to what you're doing in this tangible real asset space.
Yeah, I mean, used properly, it's one of the most powerful and profitable investment tools.
Wait! I'm sorry to interrupt you. Will you repeat that, because especially the first two words that you just said?
Yeah, used properly, can be one of the most powerful and profitable tools. Used improperly, I'm going to quote an old business partner of mine who quotes Charlie Munger pretty often, that the great undoers of men are liquor and leverage. So that's what happens when you use it improperly. And I had a front row seat really from the beginning of my career. I started in that 01 to 08, where it was irrational exuberance, people just taking out bad loans that were going to reset interest rates higher. And then after 2008, for the next 10 plus years, we were buying those loans at deep discounts from the banks that were taking losses. And sometimes when people think distressed debt, they think vultures, but we actually made more money modifying loans. That by far the most profitable scenario was we buy a loan, we do a loan modification with the borrower, we'd get them paying again, and then we'd sell the loan back to another bank, and we'd flip the paper without ever taking possession of the property. Now, so many people back then got loans they shouldn't have. So in some situations, there was people that we couldn't help, and we had to foreclose and sell the property. But by far, we did more modifications and helped more people.
Jack, on that, would you be open to just giving an like a fictitious example? Because you use some examples there, and I think for those people that are listening or watching us, because if you're not watching us, you should be watching us, by the way, everybody. Just if you could give an example, like person A, when you talk about the modification.
I've got a real one. I'm not going to use real names, obviously,
perfect.
But at a high level.
That'd be great.
Yeah, and this is probably 2011. We bought a loan. It was suburban Maryland, within an hour of DC. Borrower was a veteran, and he was a military contractor, kind of no longer enlisted, but one of those jobs in DC where you need clearance. Bought a house for $500,000 at the peak of the market, owed just under $500,000. It was one of those low money down deals. By the time we bought the loan, the house had an appraisal or broker's price opinion of $300,000. We paid $170,000 for the debt. This guy owed $500,000, and he'd lost his job at some point during the financial crisis, but now had a job, had steady income, but was 6 to 12 months behind. So he didn't have $50,000 to reinstate his loan. Mm-hmm. So we bought that loan. We did a modification where we just said, hey, start paying again. We basically took all the back payments, put it into the loan, and said, we can't just reduce your balance today, but if you pay on time and you could eventually sell or refinance, we'll give you a discount if your house is still underwater. And so we got him paying. 12 months later, there was a program called the HARP, Home Affordable Refinance Program. And, he had great credit, a 12-month payment history. His house really was probably never worth $300,000. That was sort of the bottom, but it was appraising at about $400,000. And we basically agreed to accept $370,000 to do a short payoff. So he got a new loan at a lower interest rate for $370,000. He's no longer underwater. We made over $200,000 on the transaction ourselves, and the borrower saved over $100,000 in equity that was basically given to him as a reduction. And his credit, he saved his house, and his credit was on the way to repair even faster. And there's many deals like that. That stuck out to me because he was a veteran, and it was big numbers in DC, and it was truly a win-win.
Yeah, it sounds like it was a win-win-win. So, which is fantastic. I appreciate you making it real with a very specific example, one that is from your 2011 days. So, appreciate that. Another thing, just before, because I want to find a little bit more about what you're doing at JKM Investments, but I know that also from the positive impact that you've been able to make, there has been whether you call it networking, coaching, mentoring, has been something that has also helped to move you in that direction. Talk to us a little bit about that and how that has helped you, why you decided to invest in yourself and things like this. And because I know a lot of us that, especially when we are in high paid jobs, we're thinking about, like you said earlier, like, how do I take more action? And you're, I think, a great example of what can happen. So maybe talk to us a little bit more about that coaching, mentoring, networking space.
Yeah, it's been super powerful for me. When I got started, I would just go to the standard real estate clubs. I was a regular at the real estate club, and I stayed in Rochester for a few years after college. So that's where I got started. And, I had a number of epiphanies there, just seeing a real person who was successfully wholesaling. I'd read it in the book. My first number of deals were really just my college landlord, who was a real estate broker, mostly finding them off the MLS or sort of pocket listings. But when I found someone who was truly, doing the mailings too, that was another epiphany. I was afraid to send out $700 worth of yellow postcards that said we buy houses. And by the time we did our first mailing, we probably made 100,000 on it. So just meeting someone in person who's done it, for me, that's always, because I'm a skeptic. I saw the infomercial things. I know people who've spent a ton of money on training, and some of them have done really well, but I'm also very cautious of, spending so much money on training that you could have actually bought a property with it. So, and that's a balance. I'm a proponent of training, but at the same time, there's bad gurus and good gurus. But for me, really meeting real people, and I've taken that across my career. And I spend a fair amount of time and money going to masterminds to meet other people that are in similar businesses to me. And then there's adjacent businesses. I was at an event this weekend where there was a bunch of multifamily operators and a number of other groups like me that are more fund of funds investors. So I always learn something from them, meeting and getting current industry information. But for someone who's new, I think nothing substitutes meeting someone who's a few years ahead of you that was in your spot a few years ago and has taken those steps, and so it's real. It's not just it's not just the fluff of an infomercial or a internet guru at this point. And, I think the infomercials are kind of done at this point. They're all on YouTube.
Yeah, I appreciate you sharing that example. And then and just I guess probably a great transition. Talk to us a bit about what it is that you're doing at JKM Investments and how you are also helping and who you're helping today. And then we'll get into the Going Long Final Three.
Sure. So JKM launched in 2020. I'd been previously investing passively myself for a number of years, but when I was in New York with the private equity fund, we had pension fund money, we had foundations, we had Wall Street money. We weren't allowed to take accredited investor money, and I'd always wanted to do that. And I've always been the evangelist. I was getting people into notes. And before that, I was getting people into house hacking and buying investment property. So this is the next logical stage. I'm in my 40s. I've got a fair amount of friends and connections that have made some money or paying high taxes. So we launched JCAN to give access to the syndication market, multifamily, mobile home storage, and far too many investors have too much of their money in the stock market and stocks and bonds, and just accepting the subpar returns and the roller coaster ride. So I wanted to provide access to that, and I'm investing my own money as well. So my funds, I'm one of the largest investors, and I really to give the option for diversification as well. A lot of investors maybe have 100,000 to put into something alternative. And do you want to pick one deal in Dallas or one deal in Florida? Or do you want to have the access to a number of deals that I've personally curated myself over the years? So we have a diversified fund. Then recently we launched a direct deal platform, which is basically a web portal where there's more than one deal available. And if you want to be only in one deal, we now have the option to pick and choose one deal, and the software handles it. Or you can be diversified across many deals. And that, along with the education and our podcast and our content, we're trying to just provide the deal flow and the education to my community of investors who follow me.
All right, perfect. Sounds great. And can you give the name of your podcast and give a shout out to
Sure. Our podcast is called Alternative Investor Mastermind, and it's on iTunes and Spotify. And Billy, if you have some time, I'd love to have you on in the future as well.
Oh, I'd love to be there, man. Love to be a guest. So we'll follow up with you on that one. Jack, man, we got to get to the Going Long Final Three. It's that time. But I never ask anybody, and you're our special guest today, unless you tell me that you're ready. Are you ready?
I'm ready.
I think you were kind of born ready, dude. So here we go. So question number one, or actually technically, I guess it's question number 3 of my 5 questions. It's really about bringing things back to this side of the pond. Like, I'm a guy from Columbus, Ohio. But I've been living over here in Europe for over 2 decades. So I would love for you to share with us, Jack, what is your favorite European city that you've either visited or is still on your bucket list to visit?
So Amsterdam is my favorite, and not for the reasons everyone might first think. It's a really,
because of the canals. You mean because of the canals?
Yeah, exactly. Canals. It stays light till like 11:30 at night. English is readily available, and it's also just so central. You can get almost anywhere in Europe within a few hours. And I was a Delta guy. I might be switching because they just ruined their frequent flyer program. But partners with KLM and Air France, really easy access across the pond.
Yeah. Okay. Cool. And by the way, everyone, that's summertime hours. It's until 11:30. In the winter, it's a little bit different. So question number 2. Appreciate that. So Amsterdam, we'll include that in the list. So here's the thing, Jack, I've noticed, and I'm sure you've seen this as well, a lot of times when people are moving and making progress and successful, it's not because they do everything perfectly. Pretty frequently, there's some things that go wrong along the way. But one of the things that I've also noticed is that those people that are the most successful, and I consider you to be someone in that category as well, because you're here sharing your expertise with us, is every time that there is a mistake or a learning opportunity or a seminar that you pay full price for, which I'm sure you've heard recently again, or you hear all the time, you paid full price for it. And so that mistake, that learning opportunity, I don't really want you to dwell on that, but it's the most important part, which the successful people do, is that you learn from that and you put different strategies, tactics, and actions in place to minimize the probability of that same thing happening again. So what's one lesson that you want to share with me and the Going Long family today?
I think at least in this day and age, you got to put yourself out there. Once I left Wall Street, I was trying to, the first 6 months or a year at JCAM, I was trying to be this aloof family office. Hey, I used to work on Wall Street, give me all your money. And it's really not the way my personality is. You know, you can probably tell from listening to me for a few minutes, I'm an evangelist for this. And I've always been that guy that's, this is how you save on taxes. You should do this. You buy, you house hack when we're younger. You buy non-performing loans. It's better than buying REOs. And now it's, rather than try to, if you're making good money, rather than try to buy a single family house and create yourself a job, you should be investing in syndication. So I've always been this evangelist, but for a while, I just kind of, had this aloof Wall Street mentality. I think a little bit of secret. My prior firm was very secretive. We weren't allowed to talk to the press. Mm-hmm. So I wasn't getting out of my own way. And by going to some masterminds, and we mentioned before the call, I think the original contact we had was from someone at Raise Masters through Hunter Thompson. So basically wasted about a year just not letting my personality get out there. And it was not too different than not sending postcards out in 2002 or 2003, and not putting yourself out there on social media in whatever way makes sense. And you don't need to be a gregarious, here's the picture of me in a private jet going on YouTube. It could be just, really deep content and just psychology of investing, like you do a great job of, or, people posting long form articles on LinkedIn or whatever way works. You don't need to be a gregarious person to still contribute and put yourself out there and provide value to the community. And, I was a little slow to do that. That was probably the biggest lesson we've addressed over the last year.
All right. I think that's fantastic. So don't be afraid to put yourself out there. So, and don't just say it, actually do it. So I think the two of us are proof of that, and it can definitely work. So, and shouts out to Adam Carswell for connecting the two of us initially. So lastly, Jack, is about filling our minds with knowledge. I love to go away with that. So what is one book that you would recommend to the Going Long family today?
Sure. This is an oldie but a goodie, but 4-Hour Work Week. It really changed my life in 07, 08 and reset me as I was, trying to figure out post-financial crisis. And, I think some of the stuff in there, obviously a lot more people have VAs than back then, but, I was just in Argentina 2 weeks ago, and, was thinking back to the book. It's probably why it's on the top of my mind. Because I think it was 1998. He was there. They had a currency crisis. It's 2023. There was still a currency crisis. $100 US was 70,000 Argentine pesos, and a steak and a ribeye was 10,000. So they say $10 for a 2-pound steak and a bottle of wine, because of hyperinflation there. And given some of the things in the U.S. too, it's also a good lesson on inflation and how to mitigate that potentially.
Yeah, well, I appreciate that. So the 4-Hour Work Week, we'll include that as well. And one of the things I just want to highlight before we kind of wrap things up is I think it's great. Once again, you are demonstrating it's not just about the theoretical knowledge, like you mentioned in the beginning. Like you've literally put yourself from the East Coast of the U.S. into the Caribbean, like being in Puerto Rico, because the mission that you're on is important enough for you to also have a geographical freedom, right? To be able to move to a new location. Like I live in Europe, right? And I've lived over here for lifestyle design. You talk about lifestyle design. We're wrapping things up with lifestyle design as well when you talk about the 4-Hour Work Week. So I just want to reiterate to the Going Long family, like Jack's not just talking about it, he's actually doing it. So, and you're starting from the very beginning. You talk about the book that you were gifted by your aunt, and you talked to us about what was happening in 2001, that you were in the IT space, and you went from IT, then you had the opportunity to go into what I like to call of financial services, and really getting a strong understanding of debt in terms of performing and non-performing notes. You then even took that to the next level to be able to continue to say, hey, listen, I now want to also be able to help impact others, because you had successfully exited. You had the opportunity to make your own investments, and you started seeing how that could positively impact the lifestyle that you were designing, because you realized that it's not just about money. You and I both agree, like you have to have your basic needs covered. But once you do that, then it's really about how are you living your life? Are you living your life in a purposeful way? Are you doing things that are making a positive impact? And you've continued to show us that. I mean, you even gave us a very clear example from 2011, where you were helping a veteran, yourselves and another entity. So creating win-win-win scenarios. And you continue to do this with JCAM Investments as well. And I know that the entire Going Long family is like, yeah, Billy, but just ask him the question, man. So I'm going to ask you the question, Jack. How in the world can the Going Long family find out more about what you're doing and what you're doing at JCAM Investments?
Sure. So obviously the website is jcaminvestments.com. We're also on all social media, both my personal name, Jack Krupey, like LinkedIn, Facebook, Instagram. I believe there's even a TikTok now. We are growing also a Facebook group around our podcast, the Alternative Investor Mastermind, and the Alternative Investor Masterminds on Facebook. On Spotify, iTunes, YouTube, all the major platforms. So whatever your platform of choice is, please reach out and follow along. And we'd love to hear from you.
All right, fantastic. Well, listen, Jack, on behalf of the entire Going Long family, I want to say thank you very much for deciding to invest your time with me, with us, and sharing your knowledge. So thanks so much, man. I appreciate it.
Really, really a pleasure. Thank you for having me.
All right, cool. I'll give you literally like 15 seconds. I'll wrap things up and get you out of here, Jack. So Going Long family, I mean, what can I say? Jack really literally showed it's not just about talking the talk, it's walking the walk. He's done it himself. He's helping others to be able to move forward through a strong education, being able to help to a company through taking action. And listen, continue to do that. Like take today's conversation, share it with 2 or 3 other people, and then talk about the things that Jack shared today. And then, while you're doing that, I'll be here preparing the next conversation. So until then, go out and make it a great day. And thank you very much.